Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it looks like we are once again, we're once again fighting the Fed. Not a good thing to do. You don't want to fight the tape or the Fed. And right now, basically, according to Chairman Powell, the pandemic basically has forever altered the economy. I'm not so sure that's true, but it's definitely didn't like it on Wall Street. Definitely didn't like it today. Let's take a look at just for fun. Let's take a look at the chart for Tesla. And boy, I tell you, I wish that I had put some puts on this or a put spread on this. I do have a one that I'm going to show you here really quickly. I did short, well, not short, but I did a bear put spread on American Express, and I also rolled out some of my other. I closed my bear put spread on Hershey. I did close that one, a little loss, unfortunately, but I rolled out the other ones. So, interesting day today. So basically, what's happening, of course, is that it's just not looking good for Tesla. I mean, unfortunately, it's we had to rally, and then we've started to come down. I think there's a floor right at about 620, as I was talking about on the show yesterday. The real key level is about 680, and currently we're at 685 after hours. It's up just 2 cents, which is nothing. So it's seeming like, unfortunately, some of my predictions may be coming true. And that is, let's go over here to the weekly chart on Tesla. That is, we're going to see a fall off. I believe we're going to see a fall off on Tesla. And it's going to go back down to support. And support, where I think the support is right now, if we fall below 620 on Tesla, next level of support is probably, it's probably right here at about 500. Well, I'm sorry, at about 499 or 500. That's really the next level of support for Tesla. So, it's just not looking good. And even though, Elon is selling lots of cars, it's just doesn't seem to be working quite as well. Basically, yesterday I did buy one stock, and that was the that was the XLE. And of course, guess what happened? It went down today. So XLE is not doing well. Now, some of my shorts are doing good, but the XLE not so much. And this is the Energy Select Spider. Let's take a look at the daily chart on that one. And I did buy it yesterday, thinking, oh, I've got this nice bounce off the 200-day moving average. It's coming right up. Well, guess what? It got resistance right at that 10-day line, and it pulled back. So the question is, I'm very close to being stopped out of this one. Currently, my stop on the XLE, which I bought yesterday, 72.40. It's 72.69. So if this falls any more, I'm going to be stopped out of this one. I had a pretty tight stop on this one, about a 3%. So not very exciting there. I mean, I was expecting a little bit better performance than that, but not so much. I mean, not so much. Now, we do have an area of the market that I have been doing better on, and that, of course, is the market for the bear put spreads. And I want to show you the one, how we're doing on the one that we put on today, and that is the one from American Express. And let's see if I can get that, kind of give you a full screen here. That would be really nice. Let's see. There we go. Okay, so basically what we're looking at here, this is the bear put spread that I was talking about today, and I'll also show you and what this consists of. Basically, no, that's not the right thing. what this bear put spread consists of is basically and this is sort of how it plays out. Um, Basically, it is a. Let's get to the next slide. Come on, baby. There we go. All right. So let's see. Oh, goodness. There we go. All right. So now I can see the monitor. All right. So, not letting me see. Oh, goodness gracious. Doesn't want to let me see the screen. Oh, geez. Okay. Let's see if we can get this thing up here. I'm still having issues. Well, come on. Let's go back. There we go. Okay. Well, what I was trying to show you here, and I'm not that successful at it, was trying to show you basically this bear put spread that I have for American Express, and I did put this one in today. Basically, the way it worked is it's a August 19th 145 140 put spread, and we did go into it today. Made a nice little bounce on it. We're already up on this one as it moves lower. 139 is the price of American Express today. I think we're probably going to go lower with American Express. So that one's doing fairly well. Now, I did make some adjustments on some of my trades. On the Starbucks trade, I don't know if you've been following that one at all, but I do have a short on Starbucks. I did push this one out until the 19th of August. And it did cost us a little bit, but not too much. And, we're still underwater here, unfortunately. We're still, at about $160 down. But if Starbucks continues to move, and what we did is we were running out of time. The original short was the original short was a July 15, and I just felt that there wasn't enough time to get it to move down. So what I did is I went and I just bought some more time, and we moved out the spread a little bit. One of the great things about doing spreads is, of course, that you can adjust them midstream, and that's exactly what I did here. This is called a roll forward, and basically what you do when you do a roll forward is you basically have the same puts, but you have them with a different expiry. So what you do is you buy back the original puts, and then you sell out longer. So this is called a roll, and that's what I did. I rolled out basically until August 19th. And that's going to give us a little bit of better chance as long as the market is moving lower. Also, I did this one with. I also rolled the Palo Alto Networks spread as well. We moved that one out a little bit. Basically, we moved that out until August 5th. And so again, this one it's starting to get right, but it just isn't quite there yet. Yeah, there we go. It updated. There we go. Okay. So what's happening here, of course, is that it's moving out as well. So we moved it out, and as you can see, the green is sort of coming in here. So as this thing goes out further, we're going to get into the profit zone here. So that's the whole idea behind that. So this is called a roll. This is actually a roll out. We rolled this one out. So, okay, without further ado, let's get to some of the questions. Thank you for holding on here, and hopefully we can get and answer some real questions here. All right, let's look at Western. Okay, WES. Let's see if I can pull that one up on here. Yeah, WES. And there we go. Okay, so taking a look at that, WES, again, this is the whole problem with the energy sector. This is why I bought the SLE yesterday, but boy, I tell you what, my timing was not perfect, that's for sure. This one is, you would normally think that, hey, this would be, this would be a good place to buy. It's pulled back down to the 200-day line. It's bounced but it did. It bounced all the way up to the 21-day line, and then boom, it came off. So there's somebody out there that is using programmatic trading, and it didn't hold the 21-day line. Let's look at the technicals here. Basically, the 21-day line, we're off the 21-day line about 4%. So what's happening here, of course, is that it's kind of getting rejected. Now, will it make another attempt? I suspect it will. Charles, I think it's going to probably move higher. But, you know, it was kind of disappointing today in the market because, and I think a lot of it had to do with the Fed. I mean, I think that there's just weakness. Now, interestingly enough, the Nasdaq is doing worse, of course, than the S&P. Let's kind of look at that because that's going to sort of tell the tale, sort of what's going on. Let's first look at the S&P 500, and okay, let's look at that. S. There we go. That's the S&P 500. All right. So this is kind of what happened today. Let's kind of, what I'm going to do is I'm going to kind of look at the performance on a 30-minute chart here for the S&P, and then I'm going to compare it. I'm going to do a comparison with the Nasdaq so that we can definitely see this. All right. So let's put in the let's add the Nasdaq here. And this is kind of give us a short interest. All right, so Nasdaq Composite. There we go. So this is based on basically from basically June. You know, let's go big on this one. This kind of gives us the idea of kind of the divergence that we're getting between the two indexes, between the S&P 500, which is here, and the Nasdaq. As you can see, we had a pullback on both the indexes today, but the Nasdaq, as of late, has been faring a lot worse. So, I mean, the question is, what does that mean? Well, what it means is that growth stocks, at least for now, are continuing to be dead, and that's unfortunate. But that's sort of how it's looking. And so what about WES? That was Charles's question. I still think WES is looking good, but you know, I can't really you know, and let's look at the action today on WES. Yeah, this is going to give us the 30-minute action on it. A lot of selling at the end of the day. She came in here, as you can see. So throughout the day, you know, basically, you know, we started out the day good. We moved up, down, and then up. So basically what I think about WES, I mean, I still think this is viable, but you know, this is very disappointing because, you know, we thought we had a nice reversal on this one and not so much. So if you're in this one already, you know, if you came in this one yesterday, I wouldn't be a seller here. I would put my stop loss in, but I would be very, very careful. What I would do on this stop loss, because of this nasty reversal, is that I would go ahead and see if I could put in a stop loss basically at the bottom of today's action, and that would be at about 23.90. So very, very close to where we are now. So here's what I would do if I were in this one right now, because I think that, you know, if we get another reversal, it's going to go below today's low. So 23.90 would be probably the better place to put the stop loss. So what I would do is I would set the stop on WES at 23.90, and here's my thinking on that. If you were to set it at 23.90, if you set it at 23.90, you would be, let's see if we can put that in here. If you were set it at 23.90, you're going to be basically right at the low of today. So what we want to do is we kind of want to put a line in the sand. Now we could put it down here at the 200-day moving average, but I think this is better because if it's going to reverse higher, obviously we won't sell it. But if it's going to go lower, and I think it will, and I think if it does go lower, it's going below the 200-day line. So that's where I would set my stop loss on WES. And it is kind of unfortunate. Now, if of course, if you're not stopped out tomorrow, then it's great, because then maybe it'll reverse and it'll move higher. But just a hard market to trade. That's what I would do, and I would do that. Too late to get into MCK. Yeah, this is one I was talking about yesterday. And again, this was too fast for me too. I'm telling you, I didn't get into this when I wanted to. And this is McKesson, MCK. I think we talked about it on the show yesterday. And the beauty of McKesson is, with McKesson, this is an area of the market that's starting to strengthen. As this medical wholesale drug area. Okay, it's now number 10 out of 197. There's active investment coming into this area in the market. And so basically, this is important, and it did have this, what they call RS Blue Dot. But one of the things that you really have to look at, and this is, and my software allows me to do this, and I don't think you can do this on all softwares, but this blue line here is called the relative strength line. And what you want to see with the relative strength line is something that is moving upwards. Now, we're in a downward trending market, but the relative strength of this issue, McKesson, against the S&P is doing well. Let me just kind of show you that on. Let me just kind of show you that on the on the list here. But I'm going to go ahead and display. Oops, I didn't quite get it over there. I'm going to display the indexes here, and this is let's see. So I'm going to put in the indexes. Let's see if it'll let me do that. What I was going to do is put in the S&P 500, but I can tell you that this is closing on the S&P, and it's moving up. So this is very, very strong. Also, you'll notice it came down. It got support here right at about 300, and then it started to move up. So I still think this is actionable. I mean, obviously, I would probably wait a little bit. It's so tough. I would see how the day trades here. Personally, I would see how we're trading tomorrow. But this one is actionable, and I do think we're going to see more power on it. Again, this is not a really good market to be long anything in, but if you're going to be long, this is probably one of the best ones, McKesson. And I do think that we're going to get another bite at the apple. Obviously, it would have been better to have come in yesterday, but here's the thing: if you do come in tomorrow, what I would do is I would come in, see where I could get a fill, and then I would come in right at the 40-day line. That's where I'd set my stop loss, basically at 320 is where I would set my stop loss on this one. So if I came in, bought this one tomorrow, I would set my stop loss at about 320, and that's about the 50-day line. So yeah, I know it's so tough. This is again tough market to trade. So you just can't get everything. Get everything. All right, SHIP thoughts and okay. Let's look at SHOP for Troy. Hey, thanks for watching me from beautiful Toronto. I really like Toronto actually. SHIP, of course, is an ETF that covers the shipping. No, I'm sorry, I was wrong on that. See, I thought it was. I'm mistaken. I thought it was an ETF that covers the shipping area, but I am wrong. Sea Energy Maritime Holdings engaged in the transportation of bulk. Okay, so this is a bulker. 83 cents. I mean, you probably could make some money on this one. It's sort of a penny stock. And ship transportation is doing well. Let's kind of look. I want to see how this thing stacks up. I don't know this company at all, so I'm going to kind of look and see. Obviously the ones I'm familiar with, of course, Star Bulk. There's a lot in this because these are shipping lines, and but let's take a look at some of the other ones. I'm a little bit leery about buying an 83-cent stock because it's so volatile. Of course, Starbulk doesn't really give us an opportunity here. Let's see if some of the other ones do in this group. Let's look at the. There's a lot of stocks in this group, but let's take a look at. See, another thing too is capitalization is an issue here because, Zim is well capitalized, but if it drops off really quickly. I mean, most of these are not all that well capitalized. So if we were to get, let's see, this would be, yeah. So most of these are not really looking that good. Let's look at this. Let's take a look at this one. So what would I say about this one? Well, I'm not convinced that I would buy this one, even though. Here's the problem that I have with this. Here's the problem that I have with this, Troy. First of all, it's a very, very inexpensive stock, which you think is necessarily a good thing. It's an 83-cent stock. But this thing is volatile because just a few cents can make a huge difference in terms of the price. I mean, just a few cents change and you can have a big price. Also, it's currently in a downward trend. And I'm so afraid in this market, you just got to be really careful. But it is in a downward trend. And I think you can see that on the weekly chart. Yeah, I think you can see that on the weekend. It's kind of been flat, and then I think it's now starting to move a little bit down. So here's the thing I would issue. Here's the thing I would say about this stock. I probably would not be a buyer of this one, SHIP. So my opinion, and if it's worth anything, is that SHIP is not a buy. Just because it's trending down, we're in a tough market, and because it's such an inexpensive stock, I mean, just a movement of 5 cents could be really big. So I probably would not be a buyer of SHIP, and that's just basically the long and the short of it. I mean, it's just too risky at that level. So I probably would not be a buyer of SHIP. All right, let's take. Oh, look at that, TBT. Thank you very, very much. TBT might be a good spot to buy. Okay, now what the TBT is the TBT is a ETF that is inverse of the long bond, of the 30-year long bond. So here's the bizarre thing about bonds. When interest rates go up, the value of bonds go down. So normally, when the rates go up, the value of the bonds go down. But this is an inverse, and it's an inverse of that. So this one, as the interest rates go up, theoretically, this should go up as well. So this is sort of the go-to, and I think in the midterm on this one, this is likely to do fairly well. Now, here's the chart of TBT. As you can see, it's moved up, and there is a buy point on it, actually, off of a flat base, the pivot being at 27.73. Now, why is that significant? Well, because it's pulled back to the 200-day move it's pulled back to the 50. It's not pulled back quite to the 50-day line. It's at the 21-day line, and it looks like it might reverse here. So this might give us an opportunity to get into it. Now, but would I do it? Well, here's the thing. I probably wouldn't. And the reason I wouldn't is because I'm looking at that relative strength line again. The relative strength line is pointing down. So I don't think this one has yet recovered. And I think we could see a leg down on this one all the way down to the 40-day moving average. So tactically, right here, I probably would not be a buyer of this one. I did have this one in the portfolio. I thought this was doing really well. I thought I had a really good entry on it. It pulled back. I sold out, and unfortunately, that's the story. I mean, haven't been able to get back in. All right. Okay, let's take some questions from TikTok. Thank you. All right, invite another host. Okay, let's take a look. And this is a question from TikTok. By the way, I'm simulcasting this on YouTube. So if you want to see all the charts and everything that I'm talking about, very, very easy to do. Just go to the profile, click on the link, and you will see it. There's a little thing that says Dallas Trade. It's a little thing from YouTube, but it's Dallas Trading Floor. So if you do want to see this directly, just go to youtube.com/Dallas Trading Floor, all one word, and you'll see it. All right, TXMD. Let's take a look at that, TXMD, and see kind of what's going on. Well, this is called Therapeutics MD, and it's it's interesting. It's over-the-counter products. I don't know a whole lot about this industry. I'll be honest. I am not an expert in the drug area. This is one of the areas that I don't do very, very well in, because there's just a lot of things. Now, I like the drug distributors, and of course I was talking about McKesson. I still think McKesson is viable. This is one of the truly biggest companies in the industry, and I think they will do well going forward, even in a bad market, mainly because they've got just so much distribution. But this one is a little bit more tricky here, because I don't know this area. Now, it looks as if they develop products, but here's something that's a little bit concerning to me, and I just want to point this out. In the last 2 quarters, they have had falling sales. So TXMD, you don't really, in this kind of a market where basically any misses are being punished, this is probably not something that you want to be buying. Why? Because, well, falling sales are going to probably mean falling stock prices. And indeed, that is the case. Currently, the stock price is at $9.92. But this stock has been way up here at 400. So think about it. Think about it. You are, if you got into the stock, let's say that you knew about this company and you're very excited about it, way back here, and it's been around since 2013. Well, in 2015, the value of the stock was like, $800. Okay, amazing. And then it's gone lower and lower and lower. In 2021, in 2022, this has not been a very, very good, very good stock. I mean, literally, it has gone from $140 to $9.92. Would you be willing to give me $140, and if I gave you back $9.92? I don't think so. So I don't think this is looking good. I don't think it's going to bounce either. So I would not be a buyer of this. I want to see. You never want to buy a stock as it's making a new low. So and this is definitely the case with TXMD. So I would not be a buyer of TXMD. Also, hey, another question from Troy from Toronto. Do you think crypto is dead? No, I don't think it's dead, but I think it's sort of on life support, at least for a while. Let's look at this is how I like this as a proxy for the overall crypto market. It's called the GBTC, and what it is it's called the Grayscale Bitcoin Trust. They have about 4% of the world's Bitcoin, and I think it's kind of a good predictor of sort of generally what's going on in the crypto market. And I've used this as a proxy many times. Now, crypto, of course, is it's traded through wallets and exchanges, stuff like that. It's not really listed on a stock exchange, but this one is Grayscale Bitcoin Trust, and it's worth. It has a basically an open end. They own about 4% of the world's Bitcoin. So as more Bitcoin is created, they add to their supply of Bitcoin. But they have about 4% of the world's Bitcoin, and then they take that, and then it is a security that they sell, and it's actually an ETF. But here's the problem with it. It's fallen way down to 1332. It was at a high when this came out. It was almost up here, all the way up here at $60. So, and it's fallen this much. So what is this looking like? Well, we had a gap down here, and it's moving straightly. So what I think is that based on this, we are probably going to get crypto probably stabilize a little bit. But it's really not a great place to be, because I think it's very, very, very likely that, we could fall as low. We could fall basically down here to about $4 on the GBTC. If we did that, that would mean it would be about a third of where it is currently. Now, currently, the price for Bitcoin, let's take a look at the price of Bitcoin. So potentially, based on the GBTC, I believe that we could see 2/3 of the value of Bitcoin evaporate before it starts to bottom. Okay, it isn't bottomed yet. That's the problem. So if we're looking at if we're looking at the price of Bitcoin, as you can see, it's down now at about $20,000. There's some support here at 20,000, but based on the GBT and C in my analysis of that chart, I believe that we could see 60% reduction in this price. So if it went down 50%, Bitcoin would bottom, basically at about 10,000. So I believe, and this is probably, kind of a wild thing, and you're probably going to say, Jim, you're just being negative here, but I think that we could see Bitcoin down at about $8,000 before it actually bottoms out. Now, it eventually will bottom out because I don't think Bitcoin's going away, but I do believe, based on the analysis of the GBTC, the Grayscale Bitcoin Trust, which is 4% of the world's Bitcoin, that we could see a 2/3 erosion in the price of Bitcoin. And right now, with Bitcoin at $20,000, that would be about $8,000. That would be about $8,000 to where I believe that Bitcoin is likely to base. So I don't want to be holding that Bitcoin. Now, of course, Michael Saylor is buying Bitcoin, and he's much smarter than I am. He has $1 billion company. But I tell you, I would not want to be a shareholder in MicroStrategy right now, because MicroStrategy could basically be throwing good money after bad. He just made a huge buy of Bitcoin. I think it's going lower. I think it's going lower. I think it's going to base out right at about 8,000, maybe 8 to 10,000. And then if it does that and we start to see a base on the GBTC, then I might consider buying it. But right now, probably not. XLE is going back to the $82 line within a one-month time frame. Thank you very much for that, Samil. Appreciate it. I'm very interested in, of course, the XLE because it represents the oil sector. It's basically Exxon and Chevron and the big integrated oil companies, but I kind of do follow it very, very closely because I think it gives us a good insight. The question is, will it move? Is this likely to move up to 82? Now, 82 is right there, and that I'm sorry, wrong. 82 is right there. Excuse me, I did it wrong. 82 is right there. I think that's very likely to rally back above the 50-day line. I think it really is likely to do that. So the only thing, it still has an extremely strong relative strength at 96. A little bit of an issue here with the pullback in terms of the relative strength. Here's the problem. When you look at the relative strength line, this is always a cool thing to do. This will give you a good idea of when to sell something. Now, I haven't been employing this as much as I need to, but when a stock or an ETF is in an upward trend, if you draw a line across the relative strength line and you see where it violates it to the downside, that's a sell point. Believe it or not, that's a sell point right there. So ideally, if we had been doing this right, and I didn't do it right, that's for sure, but ideally, the ideal time to have sold this would have been, it would have been back here in June 14th. Now, I bought it, and I probably shouldn't have, but I bought it on this little uptrend because I thought, oh, I'm going to get it in here, and it's going to uptrend on me. And I did, but it pulled back. So interesting thing that you can tell with these relative strength lines. Oh, and I've been showing it, haven't I? Anyways, the interesting thing you can tell to these relative strength lines. Here's kind of here's the thing on the XLE. You'll notice the blue line is this relative strength line. And what you can do is you can draw a line, and then when it crosses below that, that's a pretty good indicator. That's a good place to sell, and definitely it was. So I need to eat my own dog food on this one, because I get overly excited and I don't do my due diligence on buy points. But that's kind of where it's going. I think it may go back, to in the 80s. I'm hoping it will. It looks like it will, but it is tested. It's gone all the way down. XLE has gone all the way down and tested the. It's gone all the way down, and it's tested the $71 level, and that makes sense because that's the bottom of the consolidation that it had before. So will it move? Will it move to 82? Well, there's another way we can kind of guess at this, is we can sort of connect the dots here. Oops. Let's do that. We can sort of connect the dots sort of through there. And I think there is a very good likelihood, because it's definitely found a bottom at 70, that it's going to go higher. I think it probably will reverse higher tomorrow. That's my guess. But today was very disappointing. But I think it could easily go back up to 82. But one thing is for certain: if you're down more than 7% on your investment, sell it. What I do, I don't even make it. I don't even. What I do here is I just put in a stop loss, and then I let the stop loss do the work. Currently, now I did buy the XLE yesterday, and I currently have a stop loss at 72.40. It does not look like it's going to go below that. Why? Because in the after hours it's up 73.64. So I do believe we're going to get a reversal higher on the XLE. That's my guess, and at least for tomorrow. So that's kind of what it's looking like. All right, NVIDIA, a great company, one of the true leaders in the chip space, especially with their graphical processor chips, GPUs. Very interesting company. It is unfortunately kind of mired in this downward trend, which makes it makes it tough, makes it really tough. We did have sort of the death cross on it, but that was way back, so we all knew about that. It's been rallying up to the 21-day line, and it looks like it just lost some of its oomph. Now, what I'm going to tell you here, you're probably not going to want to hear. But here's my point with NVIDIA. I believe it's shortable, and the reason I do. Why? Why, Jim? Why do you think it's shortable? Why do you think it's shortable? Well, the reason I think it's shortable is because of this. We have a peak here, and we have this is called the right shoulder, and this is the left shoulder. So the left shoulder. Now normally we want to see a right shoulder lower than the left shoulder, and that's not the case here. But I do believe this is a trend. We could see this thing going a lot lower. Let's go to the weekly chart and see if it is shortable. Now, here's the thing. Here's one of the reasons I probably wouldn't short it. It's because look at their sales. They're going up. Their profits are doing very, very nicely. Their PE ratio is under control, and they've got good cash flow. So why wouldn't I want to do that? Well, here's why. I think that it's in a downward trend. I think it has this sort of head and shoulders pattern on it, not quite perfectly done, with a retreating RS line, and it's come down and it's now rallying to the 21 day to the 50-day line. Now, why would I even consider that? Well, because we're in a downward trend. We have quite a bit of volume of selling here. Not quite as much as the buying, and I do think that it's going to lose support right at the 21-day line. My guess, of course, it's already below the 21-day line, so I do think it's going to continue its move lower. Now, I don't think it's going to move all that much lower, but it's going to continue its move lower. The trend has changed here. There is a little bit of an upward trend in the after hours, but basically it is still, it's still looking like it may go lower. So I think it's possibly a short. I think it's possibly short. All right. Well, I am going to probably have to end this early. I don't like to do that. Just to have a bunch of things that have oh, wait a minute. Here we go. Can you please respond? Oh, can you please report spams? Oh, okay, absolutely. Actually, if you could tell me how to do that, I wish I knew more about that. Oh, block them. Oh, okay. Oh, okay. Thank you very, very much for that. I will block. Oh, I will block them. I'm sorry about these spam bombs. Yeah, I did get a bunch of them in there. Ouch. Uh, I guess if I want to get my tender dates, that's the place to do it. But I will block those, and I'll figure out how to do that. It's amazing. I'm still learning all the controls, so I really appreciate that comment. That's really great. Crypto has to reinvent. I think it will. I think we're going to see crypto reinvent itself. I don't think it's dead, but I just think that it's got to come down. I'm predicting, and it's a prediction, is that it's going to have to come down about 2/3 more. And if we're looking at Bitcoin, that means about $8,000. That's where I think it's going to base. But again, it's all a guess really. But that's based on my analysis of the chart of the GBTC. So that's where I kind of think it's going to be. That's where I'm going to look at it to possibly start buying it. I love catching falling knives. Ouch. Yeah, I know. It's so hard. It's so hard. It's so hard. I tried to go long with the XLE. I was rejected. Well, I haven't totally been rejected because it may turn tomorrow, but I'm basically going short. I mean, it's all I can really do. And even the shorts aren't that good. I'm using bear put spreads. Why? Because it gives me some leverage. And it's just a very, very, very tough market to trade. It really is. So, yeah, it's really hard to trade. Is the relative strength to relative strength? Yes. Relative strength is relative. This is not the RSI. The relative strength line is basically this particular stock against the other stock. So let me just show you that. It's really interesting, I think. And I use this a lot when I'm trading because it really gives us, kind of a very, very good. Okay, so that's the relative strength line. Okay, that's the volume. All right, moving averages. So let's go. No, that's the moving averages. So let's see if I'm gonna put in the line for the chart legend markup tool. Wait a minute. Okay. Markups. Oh goodness. Well, heck. All right. Well, I didn't get it right. But anyways, yes. In a word, yes. The relative strength line, and I use it a lot. This is this blue line here, and this is this is against the rest of the chart. So here it kind of shows this is NVIDIA. The relative strength, the S&P 500 has been moving lower. As you can see that. That's this black line here. And this blue line is the performance of NVIDIA against this index, okay? So they're basically moving in the same direction. What you want to see is you want to see them when they move in a different direction. So let's look at XOP, which is the oil and gas ETF. If you'll notice, the S&P 500 is in a downward trend, but up until very recently, and then it fell off. The relative strength of this was in an upward trend. So this was gaining against the S&P 500. So very good buy. When it converged, and this is why you want to look at this line, when it made this detour south, it then came in more in line with the slope of the S&P 500. So instead of exceeding the S&P 500 and getting stronger, it just kind of came down to kind of where it was like the S&P 500, very close to that. So that's what I use that for. It's great, and it's a great way to go. Okay, let's do the last thing, and then we will go. So I'll take one last question from TikTok. Thank you so much for taking a look at this stuff. Okay, okay. This is a question coming from TikTok. It says CPNG. Let's put that in there. CPNG. And let's look at that. Okay. This is a Korean. Oh, this is the retail. I remember this one. Yeah, unfortunately, this is a dollar late and a day short. This is really, this is last year's news. This is not what's happening in the market. Not a good stock. This one was started out very, very promising, way up here at $50. Now it's at $12. So it's it's like, give me $50 and I'll give you back $12. I wouldn't buy this one, unfortunately. I wouldn't buy this one. This is just not gonna help you out. I know that's a bitter pill, and I don't like to talk about it a lot. But one of the things you got to do, and this is really, really important, is in this kind of market that's very, very hard to trade, you need to preserve your capital. It's major importance. The easiest way to do that is wherever you buy the stock, take a calculator like this and type in 0.97 and then multiply it times the cost of the stock. Okay? And that's going to give you a number. And that number is going to be where you set your stop loss. Okay? Very important, because in this game it's keeping your capital. That's the key. Currently I'm over 97% in cash. And I do have some shorts, but basically I am 97% in cash. So that's very, very important. Well, I have yammered on. I will be back tomorrow. Thank you so much, everybody, for taking a look at the show. Also, I do want to, as I make my plea every day, please, 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 like the show, because it really helps us. Like and subscribe to the YouTube channel. That would be wonderful if you could do that. Also, like and subscribe to TikTok. We have lots of people that do that. And if you want to get on the action trailer, it's very easy to do. If you're looking on TikTok, just go to the profile and click on the link and first and last name and an email address, and we'll get you all set up. And this is the way I can. We do a little newsletter kind of thing, and it's not every day, it's not every week, but we get it out there. We also have a private Discord room that's also available as well by going to the link on TikTok, just clicking on that, and you'll see all the selections there. So I will be back tomorrow again at 5. Always a pleasure, everybody. Thank you so much for taking a look at my show, and tell your friends, please. So until tomorrow at 5, happy trading.